The turn came quietly, not with a crash, but with a murmur. Markets rarely collapse in a single moment. They fracture first, in places easy to overlook. For those intoxicated by rising charts, the early warnings were faint, like the distant creak of ice underfoot. The first tremor came in May 2022. TerraUSD, a stablecoin designed to maintain a steady value of $1, slipped from its peg. At first, the deviation was measured in cents, a glitch quickly dismissed by many as an arbitrage opportunity. But the gap widened. Algorithms designed to keep the coin stable began to spiral, triggering a death loop. In a matter of days, TerraUSD collapsed entirely, dragging its sister token Luna into freefall. More than $40 billion in market value vanished, and with it, the illusion that digital stability was immune to panic. The impact rippled outward. Lending platforms that had staked billions in TerraUSD faced sudden insolvency. Smaller investors, convinced of the stablecoin's safety, watched savings evaporate. Forums filled with disbelief, some clinging to hope, others venting rage. The first fissure in the ice had become a visible crack. Meanwhile, beyond the cryptosphere, the macroeconomic winds shifted. The U.S. Federal Reserve, after months of signaling, began its most aggressive cycle of interest rate hikes in decades. Global liquidity, once abundant, started to retreat. Cheap borrowing, the fuel that had powered both traditional and digital asset booms, became scarcer. Institutional money began to step back. On-chain data analysts noticed a shift. Whales, wallets holding vast amounts of cryptocurrency, began transferring assets to exchanges, a precursor to selling. Retail investors, facing margin calls on leveraged positions, were forced to liquidate at a loss. Volatility intensified. Days of double-digit losses replaced weeks of steady gains. Even then, many dismissed the danger. After all, Bitcoin had weathered 50% drawdowns before, only to return stronger. In crypto's short but dramatic history, volatility was not a death sentence. It was a rite of passage. Social media voices reassured followers that the dip was temporary, a prelude to greater highs. But in the cold logic of markets, sentiment is no match for liquidity withdrawal. By mid-2022, more stress points emerged. Celsius Network, a major crypto lending platform, froze withdrawals, citing extreme market conditions. Voyager Digital followed. Rumors swirled around other firms' solvency. The market's complex web of interdependencies, exchanges, lenders, stablecoins, and DeFi protocols, began to look less like a decentralized fortress and more like a chain of dominoes. Regulators moved in. Hearings were announced in Washington. Investigations launched in multiple jurisdictions. For the first time, lawmakers spoke openly about systemic risk in the digital asset space. The tone shifted from curiosity to caution, from innovation to oversight. For retail investors, this was unfamiliar ground. The rebel spirit of crypto had always thrived on being beyond the grasp of traditional regulation. The cracks were no longer invisible. Charts that once sloped upward now plunged like black diamonds down a ski run. The psychological shift was as important as the financial one. Confidence, the invisible glue of all markets, was weakening. And in crypto, where much of the value is derived from belief itself, a loss of confidence can be fatal. In this cooling landscape, the emotional divide widened. Some doubled down, buying at what they believed were bargain prices. Others began the quiet retreat, selling holdings, closing accounts, disappearing from forums. Influencers who had championed projects at their peak grew silent or pivoted to new topics. The music that had driven the dance slowed, then faltered. And still, the ice held for now. Prices were down sharply, but the true collapse had yet to arrive. The market was fragile, yes, but not yet shattered. The surface still supported those willing to tread upon it. But ice under pressure does not break evenly. It waits, storing tension, until one fracture meets another, and the structure gives way. In the summer of 2022, the cracks were multiplying. All it would take was one heavy step, one collapse too big to contain, to turn the cracks into a chasm. That step was coming, and when it landed, the market would plunge into the deepest winter it had ever known.